Okay, let's jump right in. Today we're going to break down a stock crash, and we're using the super volatile semiconductor stock Astera Labs, or ALAB, as our guide. We're going to dig into the technicals to really understand the story behind this wild ride and what the charts might be trying to tell us about what's next.
And wow, what a ride it has been. Just look at this chart. In only a few months, ALAB rockets from a low of $90 all the way up to almost $263, and then just plummets back down to around $161. You know, this isn't just a bunch of numbers. It's the story of market greed and fear playing out right in front of our eyes.
So what on earth caused this massive roller coaster? Let's trace the steps moment by moment through this incredible 3-month saga of boom and bust.
So it all kicked off pretty quietly back in July, with a rally starting around 90. But then August hits, and boom, things escalate. Trading volume just explodes to over 17 million shares in a single day. That's not retail traders, folks. That's the big money, the institutions, all piling in. September, that was the peak of the party, hitting that euphoric high of nearly $263. And then, well, then came October. The correction started, and it turned into an avalanche real fast.
And this brings us to the million-dollar question, right? When you see a chart that looks like this, an insane run-up followed by a stomach-churning crash, what do? Is this the golden opportunity to buy the dip? Or is it just a giant red flag telling you to run for the hills? To even begin to answer that, we've got to open up the analyst's toolkit.
All right, so let's see how the pros try to make sense of all this chaos. We're diving into what's called technical analysis. And just to be clear, we're not talking about company earnings or PE ratios here. Nope. This is all about reading the raw psychology of the market, directly from the chart itself.
One of the most basic tools in the box is the moving average. All it does really is smooth out all the wild day-to-day price noise to give you a much clearer picture of the real trend. Is the stock generally going up, or is it going down? The moving average helps you see through the fog.
And this is where it gets really interesting. A great way to think about it is this. The short-term average is like the market's mood. It's emotional, it's jumpy, it reacts to every little piece of news. And for ALAB, that mood is, well, it's in the gutter right now. But the long-term average, that's like the market's memory. It shows the deep underlying trend. And amazingly, for ALAB, that memory is still pointing up.
This brings us to a super important concept: oversold. This is what happens when the market's bad mood gets so pessimistic, so out of control, that the selling just goes way too far. The price falls too fast and gets totally disconnected from its long-term memory. And that creates a situation where a rebound becomes much, much more likely. Remember that word, oversold. It's the key to this whole story.
So, with our tools in hand, let's play detective for a minute. What are the key clues hidden in the data? What are the numbers really telling us about what's going on with ALAB?
Okay, clue number 1 is just staggering. On October 14th, a massive 17.6 million shares of ALAB changed hands. That is the highest volume in a single day since that buying frenzy back in August. But here's the kicker. This time, that huge volume wasn't from people rushing to buy. It was from people rushing to sell.
So what does a crazy number like that actually mean? Well, the analyst report calls it panic selling and capitulation. Capitulation, that's the breaking point. It's that moment of pure gut-wrenching pain where sellers just can't take it anymore. They throw in the towel and hit sell at any price just to make it stop. And ironically, that moment of maximum pain can often signal that the bottom is close.
Now look at this. This number is a big one. Based on its long-term memory, the data suggests ALAB's price should be up around $238. It's actually trading more than 32% below that. The best way to picture this is to think of a rubber band. The long-term trend is its normal shape. Right now, that rubber band is being stretched dangerously, ridiculously far. And what happens when you let go of a stretched rubber band? It snaps back, hard. And listen, it's not just one metric pointing to this. All the technical gauges are flashing bright red. You don't have to know what RSI or Williams % R or CCI even mean. The only thing you need to know is that they all measure momentum, and right now, they are all at extreme levels screaming one thing. This stock is deeply, deeply oversold.
Okay, so we have a stock that's been absolutely battered by panic selling, but it's also historically oversold. This puts ALAB at a classic fork in the road. So let's look at the 3 potential paths the analysis says it could take from here.
The analysis actually puts some probabilities on these paths, which is pretty interesting.
The most likely scenario, with a 45% chance, is that oversold rebound, that snapback we just talked about. But there's still a very real 35% chance the panic isn't over yet, which would be a bearish continuation. And then there's a 20% chance it just goes nowhere for a while, in a process they call base building.
So what would these actually look like? Well, a rebound would mean the stock bounces back up toward that $170, $180 range. A bearish continuation would mean the pain continues and the price breaks down even further, maybe to 150 or even 140. And base building is exactly what it sounds like. The stock just churns sideways in a range, as buyers and sellers basically fight to a draw.
So, let's put it all together. After weighing all the evidence, the panic, the insane volume, all those oversold signals, what's the final verdict? What's the real story on the risk and the opportunity in ALAB right now?
And the final take here is this fascinating balancing act. It's a perfect tug of war. The bear case, the argument for more downside, is all about the short term. The chart has suffered, quote, severe technical damage, and the downward momentum is powerful. But the bull case, that's all about the long term. The main uptrend is actually still intact, and the stock is now so deeply oversold that it starts to look like a really compelling opportunity.
And that's really the bottom line. This is what a critical juncture in the market looks like. You have this violent, undeniable short-term weakness fighting against a resilient, still intact long-term uptrend. The entire story of ALAB right now is this epic battle between the market's current panicked mood and its longer-term optimistic memory.
And this leaves us with a huge, final question, one that goes way beyond just this one stock. When you're looking at any investment that's taken an absolute beating, how do you learn to distinguish between a temporary, violent storm and a permanent, fundamental change in the weather? That, right there, is the challenge every single investor has to face